From March until May, we saw there was a huge increase in the number of listings, right? We went from about, let's say around 250-ish new listings to about 500. I think June we sort of had our peak. It was maybe over 500, I want to say, $500,000 for the average home sale price.
This is going to be our first year that a year to date, at the end of the year, is going to be over a $500,000 average price. Welcome to the TNT Real Estate Podcast, where we spark conversations that set you up for real estate success. I'm Tyler.
And I'm Tanya. Each week, we bring you expert tips on navigating the Northern Ontario real estate market. Whether you're buying, selling, or investing, we've got the tools to help you thrive. Okay, so today is January 2nd, 2025. And what we're going to do today is we're going to talk about last year. We're going to go through the trends for 2024, and we're going to highlight some of our predictions for the upcoming year, 2025, in Sudbury's real estate market.
Yes, we are.
So to start off, Tyler, what sort of trends did you see in 2024 in terms of our real estate market? So start with the first quarter. What kind of trends did we see? How are the prices? And what did you see overall in the Sudbury real estate market?
Okay, so January, we started basically where we left off in December. So we had an average price of $400,000. From January to April, that skyrocketed from $400,000 to $470,000. So it was an extremely busy Q1 in 2024. But we did have some other factors that affected that as well. We had not a lot of listings when we first started the year. Obviously, your typical winter slump, let's call it. But once we, got a few months into it, end of Q1, beginning of Q2, that kind of changed and we got a little bit more, actually a lot more. So we did think that 2024 was going to be an extremely busy year, and it was for the most part. It was stable, let's call it. I don't want to give away any of our predictions, but it was a stable year in real estate. So we saw Q1 be a little bit more busy. What do you think? Do you think home buyers took advantage of the busy market? Like, was that advertised the way it should have been? And if so, how did they take advantage of it?
Well, I think what we saw after that sort of like Q1, maybe slow for January, February, from March until May, we saw there was a huge increase in the number of listings, right? We went from about, let's say around 250-ish new listings to about 500. And you can see that trend. It pretty much mimics actually 2023's trend as well. We always see this seasonal increase of listings and increase of buyer activity. But it's amazing how much I think it mirrors 2023 in terms of that trend. So we saw buyers taking advantage of the increase in listings, the availability of homes and options that there were for them. So always whenever we see that increase in number of listings and activity, we typically will see a decrease in the days on market, right? So it becomes more competitive. So that perfectly aligns with that increase in prices that you mentioned as well. That kind of goes into probably about June. I think June we sort of had our peak. It was maybe over 500, I want to say, $500,000 for the average home sale price. So yeah, so it was pretty much the same I could see from 2023 to 2024, that increase in demand, increase in number of listings, and then the sale price, of course, going up and the days on market going down. So it became a much more competitive spring season than the rest of the year, certainly.
Absolutely. And I think just to kind of recap the whole year, we only had 8 more listings this year than we did. So not this year anymore. So we had 8 more listings in 2024 than we did over 2023, and we only had about 120 more sales, which is not huge difference in numbers. And like you were saying, like you saw the graph, it was followed almost identical to what 2023 was as well.
Okay, so by mid-year, sales were strong, but inventory was low. How do you think it affected the market going into the fall for buyers and sellers? What kind of trends did you see in the fall season?
So I think we definitely saw the increase of sales. Obviously, your September, October market, obviously more sales than November, December. So I think it did stabilize. We had our typical fall market, but I think it was it was kind of nice being out there as a practitioner. You can actually show multiple houses. It wasn't like, here's a house, you have to put an offer on it because it's going to be gone tomorrow. They got to see, 3, 4, 10 houses if they wanted to, if they took a little bit longer. But there was more inventory. The market was a little bit slower. It felt a little bit slower, kind of August, early September, and then you got into fall market. It was a little bit quicker, like usual, and then November you started seeing the decrease in number of sales.
Yeah. I think we saw a lot of our home buyers, especially, able to get offers accepted with conditions, significant amount of conditions, doing inspections, taking their time for financing, and doing their due diligence ahead of time. So that was really nice when things kind of slowed down. The buyers really had more chance to not only decide which home they wanted to make an offer on, but also to get all their conditions accepted in those offers as well. So I just think anecdotally, we saw a lot more of that, buyers having choice and buyers having options on the market with that higher amount of inventory and with the market kind of slowing down a little bit, like days on market staying higher.
Yeah. Speaking of mid-year, we had something huge happen in the middle of this year. We saw our first rate decrease. Obviously, we've seen 5 since that, but how did that change the market?
That was really interesting. So we were all anticipating these rate drops, right, for quite some time. With those increases that just kept happening over the last little while, people were getting really nervous. Consumers were nervous about spending. They were nervous about taking on big mortgages, certainly. And I think it helped with consumer confidence, certainly. Buyers felt more confident in making an offer. Sellers felt more confident putting their homes for sale and moving on with, maybe they're moving to a bigger home or a smaller home, whatever the case may be. So there was that increase in consumer confidence, but I want to say it was almost like a bit of a nothing burger in terms of affordability.
Yeah.
Home buyers, because those rates dropped, it certainly helped with people who already were in variable rate mortgages. We saw, we have a couple of variable rates where we saw them decline, thankfully. We were getting a little nervous as they were getting up there over 7%, right, for quite some time. But if you're a new home owner or wanting to become a first-time home buyer, you're not really increasing your affordability because those interest rates are dropping on the variable. It really isn't going to be until those fixed rates really, really drop that it's going to increase affordability. I think it has helped some people, certainly, but I don't think it had the impact that everyone was hoping for. I think overall, in general, it maybe helps people who are already in debt and who have these variable rate mortgages, but it didn't really help affordability for first-time home buyers just yet. Yeah. Hopefully, in the new year, hopefully now in 2025, things will become a bit more affordable.
Yeah, and I think now, especially 2025, people are going to start looking to purchase with variable mortgages again. But 2024 being over 1% higher than fixed rate mortgages, and then the fixed rate mortgages not actually going down with the rate decreases, I think it was kind of exactly what you said, just like a nothing burger. But it did help people, like you said, that were already in debt. It helped people with HELOCs and different kind of loans and anything that was a variable rate.
Variable.
So it helped. Thank you very much, because I had a couple of those as well. But I think, overall, even throughout the year, the fixed rate really didn't go down as much as we thought it would. It did go down a little bit, obviously, but yeah, I think there's still more work to do. But I think 2025 people will start looking at variable rate mortgages again, because it is getting much closer.
So what do you think that's going to do to, let's say, our investor population? Are investors going to maybe favor that variable rate again and come back to the market? How do you predict, or what do you think some of the trends are coming in 2025? And particularly, I know you work with a lot of investors, so what do you think investors are going to be doing in 2025?
In 2025, these are my market predictions. Single family houses, average price increases. I think we're going to see throughout the year. This is going to be our first year that a year to date at the end of the year is going to be an over $500,000 average price. So I think average price comes in next year, and we finished this year with like a 480 in the greater city of Sudbury. I think it goes up to about 525 is my market prediction. I think inventory stays pretty stable as far as number of listings on the market. I think, our typical spring market is going to be, we're going to have more listings in spring and fall. But I don't think we're going to see a big increase, which we need to keep our prices kind of stable. Getting back to your question, investments, I think 2025. So 2024 was pretty slow as far as investment sales. There wasn't many. There was a few or a handful every month. There was some trading off market as well, but I think 2025 we're going to see more people come back to the market. I think we're going to see some kind of beginner or like the COVID investors that, they were able to get a lot of money from the banks at a 1%, 2% interest rate. I think a couple of those people will start selling off their properties in Sudbury. The serious investors will always stay and will always keep buying more because it's a beautiful market to invest in. But I think the kind of one-off investors, maybe from out of town, are going to start realizing how difficult it is to invest from out of town and then have property management kind of take over the investment. So I think the people that are still buying are still going to, most of the investors, the smart investors, will buy in variable rate mortgages because those, I think, will continue to keep decreasing. But I think we'll have a stable market. I think we'll have a pretty decent market in 2025 in Sudbury.
Yeah. So do you think, you mentioned investors who maybe are out of town investors who bought years ago at a low interest rate, perhaps selling their properties. Do you think there'd be enough of that to sort of affect the inventory levels and increase the amount we have available for home buyers?
I don't think there is going to be enough. I think so the savvy first-time home buyers that are going to buy a duplex or a triplex, like they should be doing, I don't think there's going to be enough to stabilize that. But I just have a feeling that there's going to be some that are kind of exiting the market. And a couple have already started to reach out to me and had that conversation. Just with, mortgage renewals coming up in 2025, 2026, now's the time to start kind of looking at what do we do, because properties most likely are not going to be cash flowing if you bought at 2% interest rate, and they're going to be 5% when you have to remortgage that, right? So what's the next investment? Where are we moving our money? So I think that's kind of the title of 2025 for me.
Yeah. I think that some of those, single family home investors who were using them as rental properties, renting out to single families, they may be coming on the market because I'm not sure if they necessarily will cash flow, like you said, after the interest rates go up. Yeah. And that single family home market rental is pretty much capped at a certain amount, right? It's not increasing dramatically. Mm-hmm. So unless you're turning that single family into 2 units, it's probably going to not make sense for a lot of investors to keep in 2025. Mm-hmm. Yeah. So I agree with a lot of your predictions as well. Okay. I think 500 is a good target. I think 500,000, the average sale price, is probably where it's at. So that's a pretty small increase from where we were, or certainly in 2024. But in terms of market volume and affordability, until we have enough new housing starts that are affordable new housing starts, right? Not, the $800,000 $1 million homes that are being built, certainly by some of our builders. Until there's a significant amount of those homes that are being built in that 500-ish range, let's say, even up to 550, we're not going to have enough inventory to meet the demand of home buyers. So I think it's going to remain pretty steady. It's still going to be a seller's market, balanced maybe more in favor of the sellers, but certainly not increasing too dramatically, like 5%. 5 to 7%, let's say.
Yeah, that's basically where my target is as well. So
yeah,
let's see what happens.
That's a pretty good investment.
I think so too.
Pretty good return.
Yeah. Okay, so those are our market predictions for 2025. 2024 was very similar as far as number of sales, number of listings to 2023. And I think we're going to see more of that moving into 2025 with a small price increase, which is a very stable market like Sudbury always is.
Thanks for tuning in to the TNT podcast. If you've enjoyed today's episode, don't forget to subscribe, leave us a comment, and share with others.
We'll catch you next time. Until then, stay ahead in real estate.